Well, good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Thursday, the 27th of June, 2027, about 6:05 p.m. Central Time. Well, the big event is tonight. We're going to see history where an ex-president is debating with a current president for the presidential nod. This is going to be very important. Do I think anything real good will come out of it? Well, here's what it is. I think Donald Trump goes into it with both hands behind his back. Why? Number one, he likes to play to an audience, and there's none there. Number two, he likes to barge in as you're talking, and they're going to have closed mics. So he loses those two advantages. So does he pull a trick out? I don't know. The Biden camp, on the other hand, has to show Joe as being spry because the image of him is one of a stumbler, an old man, too old for the job, that walks in a strange manner and so on, and that becomes a problem for him. He's got to beat that image in both ways. Neither can run on the idea that they're saving us money because both spend like crazy. Look at the budget. They're both responsible for that. So that part's not it. So it'll be more about abortion issues, Israel issues, where the world is at this point, where they can take us that the other man can't. We will see. It will be entertaining, but not as entertaining if you had open mics and an audience there, in my opinion. All right. As for data tomorrow, well, tomorrow's a big day in data. This will be more the market mover than tonight's debate. You're going to get the monthly personal income spending and PCE indices. They're looking, and this is baked in so far, for a 0.4 increase month to month on the income. Spending seen up 0.3, and we'll see where the indices come out from there. Remember, this market's had a chance to look at PPI, CPI, and traders are expecting a slight increase. If these numbers fall from there, that would be a sign the Fed can move earlier. If these numbers beat these estimates, watch out. And I will cover that in the morning right after 8 a.m. Central Time for you when I put up my normal update. I'll try to get it a little early, in fact. The June Chicago PMI comes out at 845, and we're going to get the University of Michigan, but this is the final consumer sentiment indices. They're looking for it up a little bit from where it was when we got the prelim numbers. So that's where you're at. The stock market's still acting very good. I mean, you're not breaking. You know, I was doing a look to see how July has recently done in the past couple of years. You know, you had 1 month up 9%, the other up 3% in the NASDAQ. So it's not an enemy to the NASDAQ, I'll tell you that. And I mentioned the NASDAQ because that's still the darling. It's the AI market and the one that the market's looking at. And if you look at a lot of the AI stocks, direct AI, they've been able to sit here as some of the ancillaries have come up, such as Amazon and some of the others. So I find that interesting. On the energy market, you're just staying here. Now, I've switched gears to the September contract. I'm switched gears on you in Bitcoin to the July, and we've switched over to the September silver. So pay attention to all those. They're important. Some of these have last trading days tomorrow. When we take a look at the S&P, as I've said every day, if you closed right here, you're at an all-time high close for the year and for the week, obviously. When we look at what the market's done, though, on the daily bar chart, it is very much sideways action, waiting to see the reaction, I think, to tomorrow's report. And, you know, tonight will be fun. The market will maybe jump a little bit off the debate, but I don't see why. This is the first debate. There might be a second. We got 5 months before the election. But you can almost see the parameters of the market. If you break out either side of that, you could get some fireworks in the market. The basic trend is still one of lower highs, lower lows, as I've marked off with the red arrows for you. The market has stayed very comfortably ever since back here at the beginning, let's call it the end of May, beginning of June, when the market was fighting a battle at that number, and then it resolved again to the upside. So on a break, that is support. If it clears the 5,500 level, it's probably on its way towards what traders think will be the 5,600 level. So those are the ways that I'm looking at the market in there. Maybe even 6,000, because you're getting some people talking that. But what do you do the remaining 6 months of the year is the question. So I don't know there. Here's what I do know. Void of a trend, bullish bias, waiting on an event. That's what it looks like to me. Momentum-wise, you don't have a bull momentum here. You got bearish momentum. Let me walk you back a little bit here. This is the close of business on Thursday. I know I didn't do the update for you last night, but that you lost the bullish update, and the only day you could have got it back was today, and you didn't do that. That closed at 79.87. So you've lost the bullish embedded reading, which often, all I can do is give you the probability. Before you make a new high here, it often challenges the 18-day average. That doesn't mean it's bearish. You're still over that average, so you have a bullish bias, but my work would say that it should pull back to that number. We'll see if it does so before it makes the new high. In the micro NASDAQ, same thing. You had lost the reading. You're still in play. Have the 18-day average before you get over that number. That's all that it's saying, is before you make the new high, the odds favor you coming down, and you can't get away from the fact that the market is overbought right now. It is. That doesn't mean it can't catch on fire, but I'm looking still for the challenge of the 18-day average. I've had that challenge already in the Dow, which is caught in this narrow sideways band of trading, and in the Russell, first move back up to an over again, the 18-day average. Market is corrected, past tense, an oversold situation, and now it's trying to be in an uptrend. Resistance would be in this market the 2076.40. The weekly charts are still in the bear camp. In the 10-year note, you fell back to challenge, as you often do after the first move of challenging a Bollinger Band. Actually, it happened right here, and a 100-day average. You stayed over it for the better part of 2 weeks. Now you're challenging to see what it's going to do. And in the 5-year, it's the same thing. Obviously, everything waiting on tomorrow's PCE numbers. Then we look at the dollar, still the king of the road. Embedded reading, coming up against the old highs, as you can see right in here. Until it's over, it isn't over. And that means until the red line closes under 79, I contend the pros are buying on the brakes, looking for Bollinger Bands, and they're probably selling the euro against it, looking for the lower band at this time. In the British pound, I think short covering just hit the market. If you take a look at the market, this right through here was Wednesday, then Thursday's action, you hit the Bollinger Band 100-day average, and it's like you ran into a brick wall for a moment. In the July Bitcoin, you're still very much in a downtrend. Is the market losing a bearish embedded reading? Yes. So if it can stay lost, and if we take a look at this together, embedded doesn't have enough data to go back. I'm sorry about that. But if you can count it, you're losing the reading right now, which says possibly a rally back up here could ensue, which would probably tie together if you had a bullish PCE number for the marketplace. Bullish meaning that the gold market was able to rally the dollar down, and you're starting to see weakness. When we take a look at Brent versus WTI crude, it's just a whipsaw market if you're watching this. You were up at 460, went to 420, back to 460, and now 452. Just back and forth action, and you're still embedded. So this market, as I said, is probably being bought. It was bought by the pros. As long as the embedded reading stays above 79, they'll look for the market to come up to highs. There's another number besides the Bollinger Band this market's paying attention to. It's the window envelope number for resistance. So you should get those. They're in my services, and I show you what I value them at. It's the same wording for the WTI. Gasoline, no surprise with July 4th right ahead of us, and summer travel, the roads crowded. Obviously bids, and that's what you're getting. So the seasonality of this round worked. This is the one that failed too early. This is the one that caught on. So important to take notice of that. And in the nat gas, after that heat wave that we've had, we're not even going to be 90 again in Chicago for the next 10 days or so. We're comfortable, 60s through 70s. So the heat demand is falling off. The market was correct in saying it anticipated that, and you've got it. So that was the move that took place. We'll be writing about the reaction tonight to the debate. The PCE is going to be very important. What it means to the markets, the grain markets, how's the weather performing. Tomorrow's a huge report in acreage for the grain markets. You want to pay attention to that. When that comes out, that sets, the brokers will be able to take acreage numbers, and these are pretty well set in stone other than second cropping, and figure out what they're going to get in yields, where they're at, and you'll get some pretty good size reactions often to this number. So let's see how that works out, and it will affect the livestock as well. But as usual, it's the PCE, going to be a financial market day. You want to get that. How do you get our reports as they come out on this? And we issue them throughout the day on it. You go to iraepstein.com. You go up to the top left where it says free offers. It'll be in the research area there. You can move your cursor up here. You can also subscribe to my own research under the word research, and I issue my own reports on this. You have yourself a great day. I will catch up with you all first thing in the morning. Take care.